Hey, what's going on everyone? It's Vinny. Hope you're doing well. Have a gold update here for you. You're probably wondering what's going on with the price action. Is it going up? Is it going down? Is it going sideways? Is this thing bipolar? What's going on? So let me first recap what we discussed last time, right? So obviously we were in an uptrend, and I stated that we're possibly in a 5-wave scenario here. The Elliott wave, the wave 1, the 2, the 3, and the 4. The 5 would rip up to the high 1500s. However, I did state that if it breaks this trend line, then you need to disregard that, because then it's obviously a change in trend. And one of the things I mentioned for you to be very cognizant of was the price action on the 29th. And that's this candle right here. I stated because it was to the point on the stochastics where it was just about to go to the overbought territory. So as the gold was going up, it was embedded, it was locked in, but as the momentum started going down, it was about to trigger an overbought, and I stated that this candle needed to push up. It needed to stay with this momentum, and if it wasn't, it was going to trigger an overbought, and to be aware of that. And it did trigger overbought, and down we went. So that's the recap, right? And you're probably wondering at this time, what are my thoughts overall? Well, as I stated in the comment section on my previous video, there's a lot of indecision. Okay, indecision here. We had spinning top, spinning top, spinning top, spinning top. I mean, it's just so much indecision, and this one's a doji. And I stated, don't even bother trying to guess where the hell this is going. It's not worth it. Think like a pro. Don't gamble. Take low risk, high reward trades. It's much better. Go find something else to trade. You know, during this time, especially when it's close to the cloud. That's another thing I mentioned in my previous video. Look for the cloud to give you that resistance. And it gave you resistance right here, right at the edges, and also it's going to give resistance right here as well. So this is the Ichi Moku cloud, and it's just a lot of indecision. You don't want to trade this. You want to give this to the amateurs, right? You know, it's quite interesting, especially like the newbies who trade. Every time they see a green candle, they're like, "Oh my God, it's going to 1400." And then the people who are on the bearish side, every time they see a red candle, like a large one, like this one or this one, "Oh my God, it's going to 1200, 1100, 1000." And so they just chase the trades, and they guess, they gamble. You know, that's a typical amateur newbie trader. You know, just leave all this stuff to them. Okay, you guys don't need to trade this. A lot of indecision. Now, as far as my sentiment overall, you guys know that I was bearish. I actually thought that gold was just going to crash anyways to 1200 and then later on to 1000. I believe it was around this region right here, which is January, February time. So I was short here. When we had the big drop, I knew it was going to drop. It was just so obvious to me. Short here, people were like, "Yay, it's going to $5,000," and you know, it didn't last. And then when this happened, they're like, "Yay, it's going to 5,000," and then bam, it dropped, right? And then here, this small little retracement, everybody, including me, thought it was just going to roll over, and it didn't. It pushed up with the momentum. So overall, we are in a downtrend, right? I don't care if you believe gold's going to 5,000 in 10, 20 years. I don't care about that. But right now, it's in a downtrend, right? So my overall sentiment on gold is down. However, my very short-term sentiment is up. And I've got a few reasons, and I'll share that with you. And then you can take that information with whatever information you have, and you can either trade or you can watch and do what you want. Okay? So one reason is it is above this channel, this channel here. Let me zoom out so you guys can see. So this channel started when gold crashed, yeah, in April, and then it started this channel. So ever since then, it's been within the channel. Now, previously, it was above this line. However, it really wasn't in a channel at that particular time, right? So this created a new channel, and it would be one thing if gold actually did what it did in the previous, which didn't even bother to go above it. It was below it. It spiked up, you know, just now and then touching it, but no real closes. But if you look here during the current price action, you see many times it was trading outside. It's pretty much all of these, yeah, except for these two. It was trading outside of this channel. In particular, we got two areas where it closed above. It was today's session. this long green candle, and I believe there was another one too. This one, actually two, this one and this one. Yeah, except these two were pretty low momentum. So you get the point, all right? So that shows a little bit more of a stronger bullish move. It shows strength in buyers. The second is the Ichimoku cloud. Now, if you're going down, it's always good to be below the Ichimoku cloud. Last time it went close to the cloud, it went inside the cloud, was when gold was going up, bullish, and then it changed direction and started to go bearish. And so in order to do that, obviously you need to go through the cloud, right? So it went through the cloud. Ever since it did that, let me zoom in here. It never really picked up steam here. Obviously it spiked up 2 times. That was about it. After that, see this gap right here? So it didn't really come close to it at all. This was the first time during this downtrend that's this close. And not only that, let me zoom in here. It's closed inside of it. Today's session, actually technically it's previous session because it's 6:40 p.m. So this is today's session. But yeah, so this session, and this one just barely but closed inside the cloud, so it still counts. So we had 3 candles inside of it. So not only are we close to the cloud, but we also are inside the cloud. That's 3 reasons right there. And also, while it's going down, we've got this low volume. Let me zoom out here. Yeah. So we've got this low volume here, and Dow theory states that if you're going in a particular trend, the volume needs to match that trend. Let's say if a stock's going down, and then it does this little flag pattern. If the trend going up is on low volume, then the likelihood that being a flag pattern is very high. Because what tends to happen, it go up and then it'll just go down again. So volume is not that impressive. I'm not very impressed with the volume at the moment. So that's that. And then we've also got a channel. This is also in a channel, and you're probably wondering, well, what channel is it in? Well, let me show you. Okay, so this is the channel. Okay, so as you see, it's still within an upward channel right now for the very short term. I'm not saying this is the bottom, no way. And besides, I'm not in the business of picking bottoms anyways, and no experienced trader or professional trader would ever even do that. That's more newbie, amateur people. I've been there, done that, and I think every experienced trader has been there, done that when they first started trading. They don't give a crap about where the bottom is, where the tops are. They just trade in the middle. They grab the chunk, they leave, they go to another opportunity, and that's it. So anyways, it's trading inside the channel here. And today we had this long candle, which was decent, right? It stayed within the channel, which is good. That reminds me, I actually had an interaction with somebody on StockTwits. I just couldn't believe it. He's like, well, this candle is very, very important, and this changes everything. And I just kind of chuckled when I read that. I'm like, oh yeah, how? He said, oh no, well, this means it's going to 1400. I just started laughing. I was like, are you kidding me? I was like, it's just a consolidation. That's all it's doing. It's just in this zone doing its thing. It hasn't done anything major. I mean, it really isn't that impressive. It's just doing its thing within this area. That's all it's doing. So don't get too excited about this, okay? Don't be that trader, that person with that mentality thinking that just because it's a long candle, oh, it's going up. So anyways, we did have a decent candle here. This is the spinning top, means indecision. And look at that. It's right below the trend line, yeah? So this is going to become a strong trend line moving forward. So definitely keep that in mind, right? Let me use fibs right now, and I'm going to tell you basically what we're working with. So Fibonacci retracement, we're going to start over here. We're not going to start all the way to the lows, just this particular upward move, right? Now you could choose from this bottom to this high, but that's not what I'm going to choose right now. I'm going to choose this bottom to this high because it was this that caused this uptrend wave to occur. Okay, it stopped right here at my 50% level, right? So as you see, it's going up, and I'm sorry if this is very difficult for you guys to see, but it's going up. It's just doing a little retracement, no big deal, right? But you just wouldn't believe the people who just think we're just going to roll over. And yeah, that could happen, but These red candles don't mean that whatsoever. I just find it so comical sometimes that people think just one or two red candles, it means that they can kind of predict what's going to happen. But yeah, so it's pretty cool, right? It's basically stopping at the 50%. This is an interesting candle we had. Let me move on to the topic of FOMC. So remember, the issue right now is whether the Federal Reserve, the chairman Ben Bernanke, is going to taper. And recall, I said this before, I'm going to say it again. It doesn't matter whether the Federal Reserve is going to taper QE or not. Doesn't matter, who cares? The announcement, the intent is important. That's enough to drop gold. That's enough to drop the S&Ps. That's enough to make the dollar go up. All right, plain and simple. I don't care what you believe. I don't care if you think there won't be tapering. I don't care. Right? Who cares? The market doesn't care about what you think. All right, let me just be very frank. Nobody cares about what you think. At the end of the day, we got to look at the price action. Okay, so we had a huge sell-off. I recall this. It was nighttime, and Europe opened. It had a huge sell-off to this 50% level of 1281. And as soon as US opened, it went up. All right. Now, I mentioned this in my previous video. I'm going to say it again. You know, there's a theory, there's a conspiracy theory out there that, you know, every time the US opens, gold always crashes. And in this case, this is proof that that conspiracy theory is wrong. And that basically at 8:30 in the morning, so 1 hour before market opened, was what's known as an NFP, which is the non-farm payroll, and it had a negative outlook on the growth. And so that shot price action from these lows, 1281, all the way up, I think 1312, in just a matter of minutes. I mean, it was pretty extraordinary. So the premise of this conspiracy that every time New York Stock Exchange opens and gold crashes is just absurd. All right, it's just absurd. They need to know that there's certain news that comes out on or before market open. Okay, so I wanted to let you know about that. Now, the reason why I bring that up is because, if you recall, Bernanke stated that he will not announce tapering of QE until there is substantial growth, there is significant growth in the market. So when the report came out, when the non-farm payroll report came out, and when it was negative, stock markets loved it, gold loved it, because that means that tapering is not going to happen anytime soon. So the market was expecting tapering to be around September time. Now I do believe that it probably won't be in September, and that it may be December. If not December, probably next year. You know, we'll see if they'll announce it. But so the likelihood of September being a month for tapering, I think, is pretty slim, just based on the non-farm payroll, unless if something else changes. Okay, so I wanted to quickly bring that to your attention. Okay, so let's move on to, I believe, my sixth reason. Okay, so my sixth reason is this V bottom that we have right here. Whenever we have a V bottom, that's pretty interesting. If we look in the past, we didn't really have a V bottom. I guess you can say this was a V bottom, but it basically stopped at the 61.8, right? While this candle just ripped through it like it was nothing. So we had a V bottom, and not only do we have a V bottom, we have a divergence. Now, divergence doesn't mean that there's going to be a change in trend all the time, but it does give you a hint that something's up. So it's going down, it's making new lows. While it's making new lows, though, momentum is going to the upside. Instead of going down like previously, it's going up. So when it made this new low, the MACD should have been a little bit lower. The momentum should have been lower, and it wasn't the case. So that's another reason for an upward move. Now, does that mean that this is the bottom? No. Like I said, I'm not in the business of picking bottoms. This is not the bottom. My expectations, if I was to guess, is the low to mid 1400s. And at that point, I will not be trading. I'll be exiting the market. I'll be trading other things that are low risk, high reward. I'll let gold do what it needs to do. If it wants to go to 1500, let it go to 1500. I know my 20-day moving average is around that point. So if it wants to do that, it'll do that. I don't really care. But when I feel that it's going to come back to this trend where it's down, that's when I'm going to enter. All right, so I really don't care about what gold is doing every single day. I know there's always some people that think, oh, they always have to know what's going on with gold, and I'm just not that kind of trader. I don't really care what's going on every single day. And the last and final reason is because of the C wave correction that we're in. Okay, and for those who aren't aware of the ABC waves, the best person to ask really because he really is the master of Elliott wave theory. He really knows his stuff. Is Jeremy Newsome at TradeSmart University. Remember my previous video, I stated that they're giving away a free course. It is a 4-week course, meets 2 times a week, starting August 13th. It's really, really good. Again, sign up if you haven't right here. By the way, the phone number here is there not so they can make sales calls. They're not that type. It's not that type of company. It's there to give you these automated reminders. You know, there'll be automated phone calls saying that, hey, you have class today, just to let you know. And then 1 hour before class, there'll be another automated call saying, oh, by the way, you got class in 1 hour. That's all it's for. Okay, so just in case you were concerned about the phone number field. But anyways, ask Newsome. Okay, he's gonna be your instructor. This guy is full of energy. I swear to God, when you go to the first class, you'll be like, holy crap, is this guy like on Red Bull or something? I mean, did he just drink like 12 Red Bulls? I mean, that's just how he is. He's really energetic. He gets you pumped up about trading, especially if you're new, especially if you're trying to learn like the ropes. He really gets you pumped up. He gets you energized, and he makes learning fun. So later on, he'll probably ask you a lot of questions, and he'll try to get you to participate, right? And the more you participate, the more likely he is to award you, let's say, like a gift card or something, like an Amazon $50 gift card or whatever. And sometimes what he'll do is he'll just pick on a student and be like, hey, okay, what stock do you want to look at? Okay, so when he asks that, say GLD, okay, which is the gold ETF. So type in GLD in your chat box. It's very personable too. So you'll be able to interact with him and ask him questions. So don't go asking about C-Wave right off the bat, right? He'll probably be like, this is not the class to discuss that. But what you could do, don't tell him I told you this, but what you could do is ask him to look up GLD and then just bring in the fact that, hey, isn't GLD in a C-Wave correction? And what is a C-Wave again? You know, if you bring it up like that, he'll probably tell you. This guy loves to trade gold. He trades other things as well. I think he's a multi-millionaire, and he's only like 22 years old. Really, really smart guy. He will explain to you the C-Wave and gold, okay? Also ask him about what's going on with gold. Okay, see if you can compare that with my statements, just what I'm seeing, my analysis, and compare that to yours, and see what he says. So, okay, that's that. I'm going to leave the link in the description box in case you want to sign up. Again, it is a free course, and it's highly recommended by me. He's a really good guy and a very good company too. So now that I've told you some of the reasons why I have more of a biased bullish sentiment, I will tell you that the coming trading days, which is tomorrow, Friday, and next week, to expect nothing really spectacular. I think it's just going to chop within these levels. It might test the outside of the cloud, but predominantly it should be within the cloud. And for those who have been following me for quite some time, you know that these Bollinger Bands are slowly contracting. And what's so interesting is that this trend line here is very close to the lower Bollinger Band. So it might go down, go up, and consolidate, and sometimes even stay flat. So those are the times where I don't really want to trade. I might do like a day trade, but nothing really significant. I really wouldn't put in a swing position for that. So for those who are new, basically when these Bollinger Bands contract, that means the volatility is flat, and obviously the volatility needs to resume. And so when it's been flat for some time, when the Bollinger Bands contract, you'll have a powerful move either to the upside or the downside. And previous to this, we had it move towards the downside to the 1179 region. So in about a week or two, expect a volatility squeeze and expect it to either fire towards the upside or the downside. Now, should you really care? Well, if you're an informed trader, if you're an experienced trader, or if you're an intelligent trader, you shouldn't really care whether it goes up or down, right? You can do an OCO, you can do an order cancels other. You can put a buy here, and you can put a sell right here. You can go short. So you can, whichever it triggers first, you can ride that. So you can use that strategy. So we do have some scenarios that can play out. It can obviously rip up to the upside, high 1300s, 1400s, or it can go towards the downside. Now, there are some scenarios I'll be watching. There'll be 3 scenarios if it goes to downside I'll be watching. One is, does it test this level, either 1179 or the $1,200 level? Does it test it? Does it come all the way down? And if it does, will we have a V bottom like this? And if that's the case, then I am expecting high volume. If we don't get high volume, I'm not buying. Certainly not buying. And anyways, the best way is to wait until it gets above either this trend line, this channel. But if you want to be conservative, I would either buy at 1302 or at 1348. 1348 is the best bet, because if the V does happen, then technically you're in a double bottom, and that double bottom isn't really confirmed until 1348 is taken out. So if you buy at a low level, then you're basically taking it on a lot of risk. But if you wait a little bit, then you minimize the risk and you still got more to the upside to gain. Remember, the targets are about low to mid 1400s, so I don't think that you'll be shy of any profits. I think you'll have some decent gains. So that is what I'm expecting. If it does come to these levels, I'm expecting some kind of a V bounce. If the volume is low, if the volume is moderate, I will be weary of going long, because what could happen is you could easily just test the bottom and it can just go something like this, and it can test 1100 and then go towards probably 1045 region. So always you want to make sure that if it's going to bounce, it's going to have a decent bounce, and only after a decent bounce would you then buy, take care of your risk management, and then you target open for whatever fits your trading plan. Now, the other scenario that could happen is it can go down and then it could do a head fake and then it can go up. It can go down, scare a lot of the bears out the market, and then rip up to the upside. Okay, so in that scenario, level I'm going to be eyeing is 1243 to possibly 1244. Just this region, this area anyways. This is just an approximate region. The reason why is because, remember, when we did the fib retracement, we only did it from this low to this high. We never did it from this low to this high. And when you do that, the 61.8 is right here. So I want to see whether it basically stops in these areas or whether it goes below it. So the question isn't really if it goes below, but if it closes below that level. And if it closes below this level, then I will get a sell order in, exit at 1200, wait to see how the bounce is, and then go from there. If it doesn't close below 1243, I'll be on the sidelines waiting for a powerful move to the upside. Once I get my confirmation, I'll go long and have an open target. So that's my strategy for these weeks. That's what I'm expecting. A little bit complicated. Remember, trading's always complicated. There's so many things that affect it. News, momentum, fear, greed, all these emotions, right? So you always have to have a few strategies in place, so that way if something goes wrong, if something happens, then you're ready for it. Okay, and keep checking my channel. I'll be updating the channel now and then with updates. Check the comment section below, and you guys have a great trading month, and I'll see you on the next update. Thanks.